You know, for years, if you were in crypto, you kind of knew the rhythm. There was this one simple, predictable pattern, a financial metronome that seemed to govern the entire market. But what if that rhythm, that predictable beat, has just stopped? For good? That's the massive question we're diving into today.
And we're talking, of course, about the 4-year cycle. The idea was pretty simple, right? Every 4 years, Bitcoin's halving event happens, and it cuts the new supply of coins in half. Historically, that supply shock would kick off a huge bull run, followed by a crazy, hype-fueled peak, and then, well, the inevitable, brutal crash. It was the old map we all use to navigate the crypto world.
But here's the thing. A whole lot of evidence is starting to pile up, and it's pointing to a startling new reality. What if that map we all relied on, is completely useless now? What if the cycle we all thought we knew is actually dead?
The argument we're exploring is bold and it's direct. The 4-year cycle is a thing of the past. The crypto market today, it's a completely different animal than it was even a few years ago. And trying to understand it with those old tools, that's a recipe for disaster.
And this quote just nails the core idea, doesn't it? This isn't some minor tweak we're talking about, it's a full-on evolutionary leap. The whole environment that created those predictable waves, that small, retail-driven world, it just doesn't exist anymore.
So, what's changed? Pretty much everything. We've gone from a market that was mostly driven by you and me, individual retail folks, to one that's now run by massive institutions and their super fast trading algorithms. It's not just the Bitcoin show anymore. Capital is scattered all over the place. And the market's rhythm? It's now dancing to the tune of global liquidity and political news, not some pre-programmed supply shock.
Okay, so let's get into the evidence. Let's really break down the key forces that have completely reshaped this whole landscape, shattering that old cycle and creating something way more complex. First up, and this one is a real game changer, spot Bitcoin ETFs. These things have completely flipped the old supply and demand script. Okay, just look at this chart for a second. That bar on the right, the daily ETF inflow, it is now consistently bigger than the one on the left, which is all the new Bitcoin being created by miners. So what does that mean? It means the halving supply shock, the very engine of the old cycle, has been totally neutralized by this fire hose of new demand.
Second, the big money is here, and it's in charge. We're talking about giants like BlackRock and Fidelity. Their trading is done by algorithms, and these algorithms are smoothing out the market's wild swings. This means those absolutely insane, emotional blow-off tops and the soul-crushing crashes that always followed, they're being replaced by much more controlled automated trading.
Next up, let's talk about the derivatives market. I mean, just look at this number. It's enormous. It's doing over 20 times the volume of the actual spot market where you buy and sell Bitcoin. And this creates a whole new kind of mechanical shock. Instead of natural cycles, we now get these things called liquidation cascades. Basically, a price drop forces automated selling, which causes a bigger price drop, which triggers even more selling. A single one of these cascades can move more money in a few minutes than miners sell in a whole month. It's wild.
And where is all this money actually going? Well, it's not all just funneling into Bitcoin anymore. The market's totally fragmented. Capital is constantly rotating between all these different ecosystems. You've got Ethereum, Solana, Layer 2s, meme coins, AI projects, the list goes on. There isn't one big, unified market cycle anymore. There's just constant, almost chaotic rotation.
This table here really sums up the other big shifts perfectly. First off, as you can see, government policy, things like inflation data and interest rates, that stuff moves the market way more than Bitcoin's own code now. Then you have retail behavior. It's not about long emotional waves anymore, it's about instant spikes driven by memes and social media hype. And finally, the miners, their influence, which used to create those big supply shocks, is now just a tiny, tiny fraction of the market's daily volume.
So when you put all of these pieces together, the picture becomes incredibly clear. We're not just in a new chapter, folks. We're in a completely different book. So welcome to the new era of crypto.
So, let's just quickly recap what this new market looks like. It is truly global. It's dominated by big institutions and their algorithms. It reacts in a split second to political and macroeconomic news. And all of its energy is scattered across thousands of different assets and stories. That simple, Bitcoin-centric world we used to know, it's gone. For good.
So what does all this mean for anyone who's in this space? Well, it means that old playbook, you've got to throw it out. Being nostalgic for the 4-year cycle is a trap. The future is going to belong to the people who adapt, the ones who follow the data, not the myths of an era that's already over.
Which really leaves us with one final, crucial question.
The old, predictable map that guided everybody for a decade, it's been torn to shreds. The terrain is unfamiliar, it's complex, and it is constantly shifting. The only real question left to ask yourself is, how are you going to find your way?